My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets. I'll start with Paris Rapeseed first. Okay, so we still have, as I put it a few weeks ago, a notoriously unreliable island pattern from early through to mid-March, with a preliminary target X in the 435.5 area and an optimal target X1 in the 430.5 area. I've kept target X, despite it being already reached, to give an idea of the measuring moves necessary. I wrote last week, and I quote, "Since then the market has seemingly rejected the idea of the island and instead turned back up with a bullish harami last Friday," that's 2 Fridays ago, that took prices up over the congestion of highs between 440.25 and 442 even." End of quote. I added later on, and I quote, "For now I'd like to see what happens before I revise or retire target X1." End of quote. Well, this week saw a drop down to replenish ammunition from the late February to date uptrend, currently at 437.25, for a massive bullish opening long white Mariposa that only stopped at the early March peaks in the 456 even area. Then today we saw an immediate countering combined bearish dark cloud cover pattern and bearish opening black Mariposa, with prices dropping down to just under the short moving average, currently at 446.25. All this has left us this week with a surprising weekly key reversal. But that is not all. We also have the possibility building up of 2 patterns developing over March and into the future, a possible double top or a possible ascending triangle pattern. It is too early to say which, if any pattern works or will fill out, but it is worth keeping a close eye upon. Winnipeg Canola. This past week we've seen the market continue its decline, initially down towards the Fibonacci and other congestions in the 698 to 693.60 area. However, as prices moved down under the combination of the very gently rising short medium moving average, currently at 716.10, and a very recent 50% Fibonacci line at 719.20, indecision and some volatile action started to happen. Now, this could be related to the former, or additionally to the rising late October 2020 to date uptrend, currently at 707.5. This is because in quick succession we've had this week a bullish harami, just an immediate countering bearish engulfing pattern, a counter to the counter bullish engulfing pattern, and then a bullish closing white Mariposa. And to top it all, it looks like today may be a possible third countering bearish dark cloud cover pattern. All this indecision puts the recent bearishness under threat. All this also ties in with an idea I put forward 2 weeks ago. I wrote at the time, and I quote, "So what next? Well, there is something that pops straight into my mind on seeing the action, is whether this is a bearish bump and run reversal top. It's too early to say as yet, but it looks familiar. More on this when the trend line for this pattern is established, if it happens." End of quote. I added last week, and I quote, "It is not a perfect trend line, but the uptrend from late October 2020 to date is a little below, running vaguely parallel with the lows of January and this month, that's March. It is not perfect, but it might be a candidate for that trend line for the bearish bump and run reversal." End of quote. What we have been seeing this week is the market deciding if it wishes to follow this bearish bump and run reversal top idea or not. It hasn't become clear as yet, but please pay close attention as it may be happening soon. Bursa Malaysia crude palm oil. I wrote 8 weeks ago, yes, 8 weeks ago, and I quote, "I have been tempted here to also draw a new bullish Andrews pitchfork for the mid-October 2020 to late January 2021 action. Neither the lower time, currently at 39.32, nor the middle time, currently at 43.90, are that close to the market. And that is part of the attraction of this very, very young bullish Andrews pitchfork. End of quote. Well, first off, the middle time did come closer to the market, or rather the market came closer to the middle time, with the exception of an island top mid-March, so I suppose that still shows good to the integrity of the middle time. The lower time was not tested until 2 Fridays ago when it held. However, the bounce back up from the lower time did not reach the middle time. So last week we had renewed bearish pressure upon it. This resulted in the first close outside the bullish Andrews pitchfork last Friday, below the lower time. Yet even this also had issues. This past Monday we saw a fresh attempt lower, but it became entangled with a combination of the flatlining short medium moving average currently at 38.02 and the recent 50% Fibonacci line at 37.81. This caused a combined key reversal up and bullish closing white Mariposa back up over the broken lower time. However, even this did not satisfy the bearish pressure as prices opened on Tuesday on the lower time and dropped to the 50% Fibonacci line, closing just above it. The indecision was now becoming rampant as yesterday saw a gapping lower open, since filled, but batted cleanly back up as the market approached the strong looking medium moving average, currently 36.91. Prices ended up closing back over both the 50% Fibonacci line and the short medium moving average. Then today, the market gapped higher and closed back up over the lower time, but held down by the February 2011 high at 39.86. This has been quite an indecisive week, and there is still no resolution to whether the bullish Andrews pitchfork is still good. I am nevertheless ready to draw a shallower bullish shift pitchfork next week or later if this current Andrews one is no longer valid. We may hopefully find an answer this coming week. Just keep a wary eye for further consecutive closes below the lower time. Thank you for listening. This short version of broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.